All right. So, this is just a quick one to show you guys my ultimate strategy. So, I I do a combination when trading synthetics. It's more like a combination of price action and smart money concepts, right? More like that. So this trade is an example of what I'm going to try to teach you guys on this, right? So combination of price action and smart money concept. So firstly, from a daily time frame, what I did was found out this area of support zone. An area of support zone is a buy zone, so they call it the buy zone because support zones are buy zones and resistance zones are sell zones. So I'll make this video not too long. I'll show you a couple of things and what I'm looking at. Okay, so now this is a support zone. I'll zoom in so you can see what I'm talking about. Yeah, so if you look, price reacted here, reacted here, reacted here. Now it's back to react here. And the reason I put this line here is because that's currently where that is today. That's today's candle, right? So we saw how price rejected off here. And now we're looking to see if maybe price is still going to run up all the way back here or thereabout. Let's see. Let's find out. So if you look at other zones too, there are other zones in between this zone. There are other zones in between this zone. Like I could see something like this. Could see something like this. Yep, yep, something like this. I like to change mine to dotted lines so I don't get confused. So yeah, I could see something like this. So if you notice, there's a place of confluence reaction here. Price reacted on these areas. So you could box it in because I do box it in because it's an area, not a line. Yeah. Just give me a moment. Okay, so then we'll break it down to 4 hours time frame. In your 4 hours time frame now, this is where we are. We are here. And now price has broken above this level, this key level here. I usually use the body to talk about the break, right? Price have broken above this level here. Price is now above it. So we see a range, a trading range for a bullish move because this bullish move rejected all of these zones and closed above here. Body candlestick closed above this area or this high, this last high. So now we've gotten our new high for a bullish market. This market was bearish where we have lower highs and lower lows. Now we have our first high coming from a low point, coming from a buy zone. So this whole area now will now tell you, okay, where are we buying for this market from? So initially on the 4 hours, I would look out. This is where smart money comes in. Now already you've done your okay. One of the reasons why I put this trend channel is so you could see the channel in which market has been moving, has been consecutively moving. And one of another it's also part of my confirmation because then I have to look at the mid-range trend line, the mid area trend line, which is this area here, this area. Let me use this to point it out. So which is this area here, right? If you see where my mouse is running down through. So if you notice, there was a reaction here, a break and a reaction before a break. You notice there was another reaction here and a couple of reactions, candle reactions there. So, and now currently we have a reaction on that same area here. If you notice, this is the line. We have this candlestick that went down to tap on the line and closed above it, tapping on this area and also this area. So this is like a diagonal support area. You get a resistant tone support area. It's a diagonal resistant tone support area. So we're looking at this market coming back to tap the resistant area, which is here, right? So this is why my tip is there. So smart money concepts now, you have to look out for the other block, the closest other block before the break of the structure, right? Market structure break. You have to look out for the other block, the closest other block before that break. And this other block is also found in a zone. So this market is a pure buy. But now let's break it down to 1 hour and you will see where the entry is. Now on 1 hour, I would take this, I would consider this other block on 4 hours here because then it will give me an earlier entry. If you notice, this was where I entered from. If you notice, I entered from this line, yeah. So, but then, yeah, but then you could also use these other block. I'll show you another other block here. There's one other block here. This one here. Yeah. So let me make it black. Yeah, so it doesn't confuse. So yeah. So you see, there's another block here. This other block before the break. Now at this point is 1 hour, so I have to kind of increase the what do you call it? The the break of structure area. Hold on. Yeah. So this is 1 hour, and this was where the break happened. This was the range in which we're trading. This whole area is the range in which we're trading. So now, if you notice, this other block is also valid. It corresponds to the area in which we're trading. It also corresponds to this area in which we're trading. You notice how market came here to tap it and closed above, right? It also corresponds there too. So this this other block set in this case might even give you a lower stop loss. Yeah, a lower stop loss value. You could shift your stop loss to maybe below the other block or just at the base of the candle, the last candle that tapped in on that area. But me, I like to put it just below the other block. I like to give room. It's always good to give room for your candles, for your stop loss to run, for the price to run. So give a stop loss room, a good room for your stop loss to run, for the price to run around your stop loss area. So if you make it a tight stop loss, you might have a retracement that will come and clear it up before it will start going your way. So this was the trade that I took. A lot of people would actually that I missed this trade. So a lot of people would actually what do you call it? Would actually go down to 15 minutes. Most people, or some people might go down to 15 minutes to trade this pair. Yeah, you might go down to 15 minutes to trade this pair, picking this other block here. It's still valid. It's still valid if you wanted to pick this other block for 15 minutes here. It's still valid. This one is still a valid other block, right? Yeah, it's still valid. And if you were trading 15 minutes, probably your entry might now be either, let's see, after this place. Yeah, your entry might now be either you enter here, put your stop below, or you enter here, this part. Okay, after it has stopped in and leave left. So, and 15 minutes gives you a tighter stop anyways. Gives you a more tighter stop. So that's the trade that I'm in, or that I missed rather. So right now I want to go look out for more trades that I could take. This one is already gone. I don't chase the market. If you miss it, you miss it. There's no point chasing the market, right? So let's go look out for one more trade. Let's see. V50, what are you saying? This one is not yet. I don't think it's ready. It's a sell though. Yeah, it's a sell. V50 is a sell. Oh, no, not yet ready. No. Second. Okay. Sorry guys, that was my I was trying to find out if my um Younger sister was home. I heard somebody coming. That's why I'm asking. Oh, okay. This one is not yet ready. So you got to look out for the most ready pairs. Don't just trade the market. Don't just run into the market. This one, I don't like doing my top-down analysis from a lower time frame though. But if I was to take this trade, this would be my approach on this trade. I'll show you because then it's on a high and probably if you look at it on the 4 hours, it's maybe going to come down to this point here, right? But you don't know that. So all you just know is let's see what it happens. So it's just still here. It may consolidate there and start shooting back up. So, but if I wanted to take this trade, this would be my approach to the trade. On a 1 hour, where I'm going to be starting I saw a break of, what do you call it? A break of structure here, or would I call it a change of channel, change of character rather? So I saw a change of character here. I saw a break of structure here. So the range is between this point and this point. So I'm just going to put a range. I'm just going to indicate a range there. Yeah. Yes. So I've indicated the range and we know it's selling, right? Then you go down to 15 minutes to find other points in which this market may retrace or come back from within that range. So this was where it broke out from, right? This is where it broke out from. Or rather, some people use the week to indicate the break of structure or change of character. So, but I use mostly body close. Once the body close above or below the body, that's what I use. I hope you guys can hear me though. Um, Now, if you're looking at this, we have a hold up. We have a yeah, we have another block here. I'm just trying to put it straight. Come on, guys. Hmm. Usually this is the rev. If you was trading view, there are indicators that show these things, right? So yeah, so you map out for the other block while you map out for now. There's another block here, but it's quite too big. Yeah, you could go down to 5 minutes to see other opportunities. Let's just look at it and see what we have. Okay. Okay, yeah. So this may be liquidity. This may be liquidity. Trying to grab liquidity here. So in 5 minutes, the other block is kind of around this area. Around this area. This is the first order block here. In 5 minutes, which is this particular candle. Yeah. Now the second, we have a lot of what do you call it, fair value gaps here. Imbalance here, imbalance. There's an imbalance here, there's an imbalance here. And yeah, so there's another order block here, which market may um, react to, which is here. Yeah, market may react to this order block as well. So we don't know yet. We don't know yet. But this is if you're going to be trading this thing from this time frame. Like you want to take the sales and it's going to be a short sell. If I'm taking this trade, I'm taking it for, so now you now have to start looking out for I'll take it for, let me finish that statement. If I'm taking this trade, I'll take it for um a short time. Maybe I'll just do a 1:2 or 1:3 in a lower time frame. So I don't get to wait all the way because the overall base of this trade is here. Let me click it. Yeah. The overall base of this trade is here. It's here. Somewhere here. Yeah. You get this is the overall base of the trade, right? Of this particular market right now. this is the overall base of the market. So I'll just put this just to let you to indicate where we are. Okay. Yeah, so if you break it down to 15 minutes, you see where the overall base is. I don't want to go below this point, even. Yeah, I know it's here, but I don't want to go below even this point. So whatever I'm going to take, maybe I might, if take my 1:2, if market reverses from here, I might take my 1:2 to this point. If it reverses from here, I might take 1:3 to this point. Again, depending on where I find the market anyways. So this trade is just something I would keep on the low for now. I know some people, traders who would even buy this move, right? They'll buy this move now. They'll ride with the market upwards till it gets to a zone. But yeah, I love to wait for the market. And most of the time you learn patience faster when you lose some amount of money in the market. So let's check another one. I want to get a serious pair. Okay, this one I was trading. I traded this one. I took my profit on it and I left the trade. I think I joined this trade on a 1 hour. Yes, on a 1 hour. Yes, it was on a 1 hour. So if you notice, I also used the trend line box, the trend line channel, right? So if you also notice, you see the mid range too has their confluences here on the mid range. You get their interactions rather, their interactions here on the mid range. You get so it's also a form of a mid level support and resistance, but on a diagonal support and resistance because we know markets move from support to resistance, resistance to support. So it's always going that way. So I saw this trade, just like I was saying, there was a break of structure here, right? So the range of trading was before here. Okay, I took this one as well. Yeah, I took this one. The break of structure, this structure, I saw it in a 4 hours. That break, yeah, you see it. I saw it in a 4 hours. All this whole length, I saw it in a 4 hours break. Then I saw a valid, I think that it was a 4 hours, yeah, it was a 4 hours fair value gap, an imbalance. Yeah, there was a valid imbalance, which was kind of inside this order block, right? So I knew that if market was going to come back, it's going to be around this area, although it broke even below this mid-range support. But yeah, I was waiting for a comeback. So I had my range fixed on that area. So this was the area I had the range fixed. So markets came back to that fair value gap in 4 hours here. Originally it tapped here and closed there. I would have loved to buy, but I kind of waited. I wanted it to hit like the middle order block, like the middle line of the order block. I wanted it to like hit the mid line of the other block. I think I need to set up this thing so it doesn't keep getting me confused. Yeah. So I wanted it to hit the mid range or the midline order block. You get so, but it didn't. It didn't hit. Yeah, it didn't hit. So I left it to that. So once immediately it got back, rejected off it, and came and gave me a sell that closed below this point. It wasn't a candlestick pattern as at that time, but yeah, I was just willing to take my profits 1:2, 1:3. And luckily, I saw the trade. I did a 1:3. I think it was around somewhere here. Yes, it was around somewhere here. I did a 1:3. In fact, I think it was here. No, no, it was somewhere here. Yeah. So I did a 1:3, but the market overall gave a 1:5, 3.5, right? Overall. So, but then 1:3, 3.5, 1:2. These are viable if you stick to a particular goal and keep your risk low, keep your target low so that you could replicate it over and over. I learned something in risk management it's a very powerful way to manage your risk by doing a 1:2. So there is a way they explain that, but I would teach you that in another video. Okay, so I got my entry here, I took out the trade. So next I saw another break. This one came back all the way to this point. If you look as well, you see that this thing was in an order block range, this particular order block now, the range. It came back around the order block, spiked above it. This one too did the same thing. Yeah, so this was why I didn't send this one, because I was waiting for a proper mid-range and a close of a sell candle below that point. So if I was to draw a order block, or let's say fair value gap here, this would have taken you out if you were taking fair value gap. But then I didn't trade this pair. I didn't see it all the way from here. I only saw this push breaking below this point, right? So I saw a move, and now I had to put my range above this one. So where else would market react? Firstly, there is a break of this mid-range support and resistance zone, a mid-range resistance or support turn resistance, right? Now, there is a little confluence of a zone here where you have markets tapping, then breakthrough and came back to tap. So one was here. I saw this as an option that I could take. This one, if you notice, this was also 1:3. So 1:3, 1:3. So I saw this as an option. So once I saw what happened here, the tap, break, it was formerly support, then breakthrough, become resistance. So I entered this trade once I saw this close of this engulfing candle, right? It closed below it. I entered it. My stop was just above the mid range. Let me fix this thing up. I need to put this thing. Okay, I'll do that. The next video, this won't be there. All right. So over time, I'll be analyzing the market live, and I'll be posting my analysis and the way I'm looking at it, what I'm seeing, right? I'll post it, and I'll also tell you guys, okay, what to follow and what not to follow, right? So, so this is it. Yeah. So it gave me this option. If you break it down to a lower time frame, you might even see a better option, but I'll show you the other block there. So this was the other block. This was the other block here. If you know, you see this green candle, right? Yeah, this green bullish candle. It was the last order block before the break of the structure, right? It was the last order block before it broke off this little uptrend structure, changed character and broke down here, right? So that was why I had to pick this other block, although there's one other block here, but it wasn't as, I wouldn't say, I would wait for it, but it's rare for price to take off this zone, to break below this trend line zone, and also break below this normal support zone, right? And still come back there again. So it's rare for price to do that. So all I was waiting for was just these two confirmations, and that was it. Let me put this back. Yeah, so this was where I got in on the trade, and the mid-range was here. So my stop was somewhere just above here, right? That was where my stop was. Although it took some time, even came back like 50% of my stop loss. This is why I say you have to give it room to breathe. Give your price, your trade room. Make sure the stop loss has a good range. This is why I use chart stop. Now there are four kinds of stop losses. There are percentage stop, there are chart stop, there is a, I can't remember all of them. Give me a minute. Let me just check my journal. It's always good to keep a trading journal. So you would always go back to your trading journal to remind yourself of the things that you used to know. Okay. So just an advice for those who are Yes, there's percentage stop, there's volatility stop, there's time stop, and there's chart stop. So I used the last one, which is chart stop. I will explain that in another video. So let me know if you want to know more on that. Then I will give you a full breakdown of what those stop loss are, right? So, but for now, I was using the chart stop. Chart stop just simply means where in the price that when market comes back to that area, it will be invalidated. Where in the price is your invalidation point, like your trade analysis would be invalid if market comes back to that area. So originally I put it on the last high. You get this is the last high. You get so market is already on a downtrend, and in a downtrend it's rare for you to have a high that come back to that same for, to come back to that same last high you get. So it's a safe place to place your this thing. So whenever you're doing it, you can adjust your stop loss, your lot sizes, so that it could suit in the amount of money you want to lose or you want to make. Okay. So then do your 1:3, 1:2 ratio, however it is. So, but yeah, I haven't found the trade yet. Let me let me still go back. I need to get a trade. I need to get a trade. Why the hell is this thing not saving? 1 minute. Let me refresh this page. So one thing with I think I was on this I'm on this trade. Yes, I'm on this trade. Oh, wow, it's really pushing right now. I'm on this trade currently. Yeah. So this volatility 75. Mm-hmm. And this is what date is this? 29th of January. Yeah, 29th of January. So I'm on this trade. Or you see my target? Did you see my target? 1:3.5. But then I could easily do 1:3 by just moving it somewhere here. Yeah, it's still within the range, anyways. Still within the range. But I entered late on this trade. I actually entered late. My initial entry was supposed to be here at this point, just after this engulfing candle has cleared off all these areas and also broken down and closed below this fair value gap that was here. So I actually entered late on this trade. I was late on this trade. Honestly, I was. So, but yeah, sorry, I had to take a quick water. Um, yeah, I entered late, but then the market is still viable. Like I always say, I don't chase the market, but wherever you want to enter the market from, your chart stop remains your chart stop. Because if I entered here and I put stop somewhere here, market could come back to tap around that area before going back down, and I'm out of the market. So there's no point risking that much. So I would just enter where I'm comfortable entering and let the market ride. Okay. So I entered late on this trade, but I am actually still in the trade. I'll save it. I'm actually still in the trade. I'm looking for a good pair, good market to trade at the moment. No, this one, we've checked on this one. What's the next one? Oh yeah, this one was the one that I said we missed. Yeah, this was the one I said we missed. I missed this one actually. I missed this one. But if I had seen it, definitely I would have taken it because everything was just riding well. So this one, you could do a 1:3. It's safe to actually do a 1:3. 1:3 brings you to this area, to this area of the market. You see, 1:3 brings you to this area where you have this support stand resistance area. So 1:3 is cool to have in this kind of situation. You could do a 1:3 and you're out of the market. So most times market could give you a long run like this, but you just have to be contented to get what you want out of the market, especially when growing an account. Because I'm currently growing an account right now. Yes, I am. I'm currently growing an account right now. So these are other one step 500. Very good trade. Very good trade. Very, very good trade. After the break of structure on a daily, it came back all the way to locate that I think is an order block. Yes, it's another block. So it kept tapping, 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 tapping. All I knew was that it has tapped this place. So this would have even been safe. But although you would wait for the reversal, I love to see the reversal. What I mean by reversal is I love to see where there's a change of character in the market. I love to see where there's a change of character in the market. So I follow through. Once there's a change of character, a break of a high, then I could take this broke this high, then I could take this one. You see, so that was why I took this particular trade riding up. This was a 1:5. Yeah, I took it riding up because there was a point. If I go back, this place now at this point, there was no break yet until here. This market high broke broke up this high. So I waited for the other block. Find there, I think other block or FVG, yes. So this was the first high that got broken, this one. So I waited for this other block. Okay. The other block, I think I found it on lower time frame. I think so. Because this candle is not the other block. Where is this? Okay. Okay. Yes, 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 yes. So that was it. So I found this other block for 15 minutes. It merely tapped, gave me a star, a a morning star pattern closed above the other block range. That was the entry for me. That was the entry for me. Mid range, this one too black. So yeah, that was the entry for me. If you notice how it closed above, if you just notice it, how it closed above. So that was my entry. So I took the entry to this high here, to this high, because on the 4 hours, that high is like the high point. So I took the entry to that point and I waited for it to ride. So if you wanted to do a 1:3, this is where 1:3 is. 1:3 hit on your first two candles or three candles. Yeah. So this is where you have a 1:3. But then I just took the high because I know the market is ranging in that area and it's not going below this support. You get this mid-range bigger time frame order block. Okay. So but then there were um many interactions to trade this pair. There were many. You see, after you take this one, it comes back, there's a break again, it comes back here, you find another entry within this place, you find another entry again and jump in and ride with the market. So if we're looking at that place, let's do a quick one. So this one came all the way down here. If you were to take this, there's no other block here except you go down to a lower time frame, but then this one would have wiped you off before you see a buy. You get, so this is why I don't like pending order. I like sitting on chart to wait for it to finish what it's doing. So at this point, I would have waited for this break of structure here. When market broke above change character here, broke a structure here. Now I would put my order block here, somewhere around here. I would get another block, check another block here, put other blocks there. So I would actually do that to wait for this one to come in and tap in on the zone, close below the zone with a star or something, then I would ride with it. Okay. Well, I think you should get the point by now. So this is not for beginners traders. Beginner trader, you have a lot to learn. Not this, not what you're saying right now. Ooh, this is massive. Let me do a top down and see what's going on. Oh wow. Oh wow. Okay. This is supposed to be a bullish market. Okay. This is today. Okay. I think I traded it yesterday. Let me check what's going on here. Yeah, I traded it yesterday. If you notice, you see 1:3, you see another 1:4. So I actually traded it yesterday, but on a lower time frame. So this was the overall push. telling you it's a buy, right? Now, this was the order block pattern that I saw. What's going on? Okay, so this was where I found it. Overall push, range, trading range, market coming back to tapping on the order block, right? Tapping so many times, close here, tapping like that, close. So originally, yes, I would have taken a loss if I had seen this one here, because I would have taken the trade. This is a star, a morning star. It's a confirm one. So this would have taken me out, or I would have taken here and my stop would have been actually below this or at this middle range. Would have been at that middle range. Yeah, so it would have taken me out. But then where I found the market was here. This was where I found the market. So market did a what do you call it? Market did a recap here, retap here after breaking the structure. Market did a retap on that same zone, close below here. I just knew that it kept giving a high, a low, a high, a lower high, which is not a higher low rather, which is not below this point. Pushed up, give you a higher high, came back again, gave tapped in on this same zone. If you notice, this tapped, but this wasn't lower than this, and this is not also lower than this, but there was a tap. So when it closed here, I just took a buy from there, put my stop below, just a little bit below. If you look at it, it's just a little bit below that point of my entry. Oh shit. So I want to take off this line. So you see it's okay. So you see? My stop is just a little bit below the week. So I took it and I did a 1:2. It was supposed to be 1:3, exactly 1:3. And if it was exactly 1:3, this was where the chart would have been. You get, so just at this tip here, yeah, it's actually a 1:3. So when I saw this coming back again after a break again, I saw this coming back again on a fair value gap point. On a fair value gap, I think this fair value gap, I saw it on 15 minutes. I can't even remember. Yes, I saw it on 15 minutes. What's this? FVG where? Okay, yeah. Yes, but this supposed to be on 1 hour. Let me check 1 hour. How did I come up with this? It's supposed to be here. Yes, supposed to be here. Yeah. So that's it. So I saw this point too coming back here and the three candles. So there are different entry techniques or entry patterns or entry method, right? So you could do weak rejections like this after you've seen a lot of weak rejected, weak rejected, which is same pattern here, weak rejected, weak rejected, weak rejected. And all the rejection closed above is showing buyers are pushing in a lot of force into the market, regardless of the selling force. Buyers are rejecting it more often. So in any time, you would see a good push. So if you had even followed this was a clean 1:6. You get, if you had followed this trade above, I think I stopped just somewhere. Yeah, I think so. But that was it. I'm here explaining plenty. I never even find trade. So guys, just be careful what you're looking out for in the market because all these volatility pairs can be, especially jump. You see jump pairs. That pair is crazy. It's crazy because I was on a jump pair and it jumped to my stop loss. Like it jumped. This is why they call it a jump, right? It jumped to my stop loss and even gave me I was like on a 30 pips stop loss, but by the time it jumped, its stop loss that was moved out from my account was like 50 pips stop loss. You get, so man, it was crazy. All right, this is a jump pair. We're doing the same thing here. Already we see this, a lot of things are happening here actually. A lot of things are happening here. Currently we have this point. Yeah, I didn't put this well. I think it's somewhere around here. Somewhere around here. Yeah, somewhere around here. You see how I changed it to line chart, so I'll be able to see what I'm doing. Oh shit. So so yeah, this is a zone. If I go back to candlestick, so you see, this is why I changed it to line chart. So I could see well. So that's a zone where market is. Market is currently in a zone at the moment. Zone in zone. I like to shrink it down so it doesn't like cover a lot of space. Yeah, so I think that's it. For now, let's freeze it, see what we have here. I hope this is not too much yet. Mm, okay, so we have a range on the 4 hours. We have a range. Range is here. I need to take this to go. Range is here. The reason why I put this one here is because I'll I'll show you when we get to a lower chart. So on the 4 hours, this thing is already bearish. If you notice, this whole push broke below this structure here. You get it broke below the structure. So it's already bearish by what we can see. It's already bearish. So we have a range of trading, which is this whole range to trade as a sell, right? Because yes, market is on its own because this tapped in here, this tapped in. It could still be that this market will go back or break above this zone. Then we'll start looking for buys, right? But for now, our mindset is sell. So we have a lot of fair value gaps to be filled at this point. Now, at this point, I could even take this trade as a buy because I've seen a break here. Market broke through this point. What's this? Let's take off this. Market broke through this point, this high here. There was a little high here. Market broke through it. And if you notice, market is even doing, yeah, it has even broken through this one here. So if I was able to take this one, I would have looked for a a range from here, like where market will reverse from here. I would have looked for it somewhere around here. Mm, this was too much. Well, it's still there. I wouldn't do that for now. So still on the bullish bias, right? There's a fair value gap here. There's a gap here. Market needs to fill. There's a gap here. Yep. Yeah. There's a gap here. There's a gap here. There's a little gap here. There's a gap here. So there are just lots of gaps. There are just lots of gaps before you will now have your normal yes, before you now have your normal. So there's a gap, there's a gap, there's a gap. Market is coming back to fill up all those gaps. So then there's this other block here. There's this other block here, which is valid, very much valid. All right. So at this point on 1 hour, except the only thing that could make me take this trade right now is if I would have taken it from here. Oh, see this little other block here. This little other block here. Yeah. I would have just taken the buy from here, take out, stop here. I would have done something like this. Target would be this high. Stop be just below this point, below the middle, what you call it, below the middle order block line. Yeah. So, and it would have actually given me, this is 1:2.5. So it's around the range of my TP where I would likely collect it. So now, if this breaks through, I would need a full body break. This breaks through. Yeah, so I would need a full body break. Let me expand it so you see what I'm doing. So you could either do this, because I know a lot of people want to put it on the highest of the highest. So whenever this market closes above here, this is just this candle is just starting. So, but I would most of the time put it here on the body. Yeah, most of the time put it there. But however it is, so when it does this, if this market is going to ride all the way back up here to take out all this stuff, then we would have to have something like this after a closure to find one of the points here, order block, fair value gap. There's a fair value gap here already at this point here. There's a fair value gap. So I'd want to see something like that come down somewhere here, then join it back up to take profits either here, 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 any of these places before it to go and take out this point, then start coming down. So, but this was likely what I would do, you get. So let me just put the fair value gap now. Then put in my fair value gap now. Okay, so yeah, I could label it. All right, so whatever I'm looking out for, I would let you guys know. If this market comes back down here at this point, or maybe down here, however it is, I'll look for something to take it back up. All right, so um, I would say that is it for today. I think I would. Did I put this chat? Okay, jump 75. Okay, okay. This one a daily is meant to. They don't love you like I love you. Slow down. They don't love you like I love you. Back up. Okay, so this one is not yet ready. I would have taken it on this other block though. I didn't get a signal to, buy. It just went straight down and there was no confirmed change of character, if you notice, except if you want to do it on this point, right? Yeah, but we just went straight down to close here. So, well, let's see what happens next. I'm not looking at this trade yet. Let's see. I'm seriously looking for a trade so I could just battle Fetchy. This one too was another one I was waiting for. If you notice this point, you notice what I was seeing here. So I only use that trend line channel when I have a confirmed channel. When I have a confirmed channel, like somewhere here now, then I use it. But at this point, I could say market is ranging just between this area and this area here. It was a downtrend, then it broke off this high, came back again into here. So I was actually waiting for this market to give me this, to come to this point. So you get to come to this point, this other block point. Yeah, but then even though I have a fair value gap here, there's a fair value gap here. There's a gap here at this point. Yeah, there's a gap here. So even though I have a gap here, which you could look at it this way, yeah, you could, but nah, I would prefer it drops down to this point. And again, market hasn't started becoming bullish yet. It's still bearish from this whole move down. It's still bearish. So on the 4 hours, this is what it looks like on the 4 hours. Let me take this to now. Yeah. On the 4 hours, this is what it looks like. So it's been ranging, it's been taking out the high, taking out the low, taking out highs, taking out like that. So I would need a proper trade. I would need a proper trade breakdown on this. I would need a proper confluence. It has to confirmation rather. I would need a proper confirmation. It has to come here. Yeah. So that's the last job. Okay, yeah, that's crash. When crash, more these things are just fishy. Well, so what's gonna happen? I think for now, I'm just looking out for that particular pair. This is a flag, right? So let's get to Boom. I hope Boom has something for me. Okay, so I'm waiting for there's a break here, so I'm waiting for interactions here or here. So yeah, could happen. Still waiting. Boom 900. Give me something. Give me something. I don't wanna know. Give me something. Anything at all. Give me something. Man, Boom is just anyhow. Yeah, but okay, so I think that's basically it for now. Yeah, my trade is running. It's running. It's skyrocketing. So this trade is a good one. It's already a good one. So for people that mixed it, if you had seen this entry, you would have entered from here again, but it would have been like lesser. Maybe 1:1, 1:2. No, 1:1. Yeah. This is like 1:3 points. Jump 75. What do we have? Are we to wait for this? Oh, yes. So I'll wait for this to see what this will bring after the break. Yeah, I'll wait for it. Save here. Jump 50. Ouch. Did this just tap and leave? This is why I was talking about jump. Jump is a very crazy pay, man. Very crazy. Well, this one is out first for the meantime. Let me do a top down. See what I have. Okay, this is not yet confirmed. This is still bearish. Market is still bearish, and but then it's in a zone where it has rejected multiple times. So let's see. So the day on a 4 hours is also bearish. The 4 hours is bearish too. So this is why I put my range here. I think if this thing was, man, He tapped it, came back out. Man, this is crazy. Oh, this is crazy. This is crazy. It's crazy. It didn't even go close to my mid-range, mid-support stand. Didn't touch it. Avoided it. Like, okay. What would I have done? Let's see. Is a range? Is a oof, this is not too sure. Not too sure. Probably this one then. Hmm. So there's another support here, this bullish candle. Yeah. There's another other block here, rather. This bullish candle. So for now, trade we're looking at for is this jump 75. We're looking out to see what happens. So I'll give you guys a trade update. I'll post it on my Instagram. I'm still yet to open a Telegram community. I'm building this community to be organic. So I'm still yet to the Telegram community. So let's see how it goes, okay? But for now, I'll be posting everything on Instagram until yeah. So jump 75 index is where we're waiting. So guys, have a nice day. Look out for this pair. I'll also be looking out for it. So bye bye for now. Josh FX Pro signing out.